Facebook. How we doing? If you're watching this on YouTube later, thanks for checking it out, or on Facebook later. I'm using a little screen share tool here, apparently Facebook Live has. So if you guys are watching this live, let me know if you can hear me, because I have no idea if this is actually going to work or not. So another new tool I'm kind of playing around with to see if this works. But if you are on here, just shoot a little comment on here and let me know if you guys are seeing this. So I've got one person watching. Oh, they're gone. Okay, maybe they can't hear me. Um, anyway, guys, I guess I'll get this thing started. So today I am going to share with you guys not only the closing statement here, but exactly how we did this, and break it down into the numbers and show you guys how you guys can also do this same thing. Again, if you don't know who I am, I'm Corey Raymond. I'm one of the co-owners of a company called Fox Cities Homebuyers here in the Green Bay, Appleton, Wisconsin area. And we primarily focus on finding discounted properties, but we also have a holding company where we hold properties, and more so getting into the multifamily space. So again, if you're watching, if you can hear me, you can do me a huge favor, just comment, yep, I hear you, or like it, or do something so I know that you're able to hear this. If you guys are interested in getting into real estate investing, or you're currently somebody who's doing it, but you're not happy with how things are going, you definitely want to get onto our buyers list. So shoot me over your email and cell phone number, and include maybe some of the challenges you're having, or some of the things you're looking for in a property, and I'll be happy to get that over to you guys. So anyway, I wanted to share this with you guys here. So again, I don't know how much you can see, but oh, Cassie's on here. Cassie, if you can hear me, just shoot me a little hello or a little yes or something on there so I know that you can hear this. But anyway, guys, I was talking yesterday in one of the posts about sharing this information with you guys. And before I really get into it, hey, Jerry, what's going on? I just wanted to, first of all, say thank you, Jerry. You can hear me. Great. Love it. I just, first of all, wanted to say, guys, this isn't going to be for everybody. Thank you. There are some people out there, guys, who do it a different way. Jill, I just found myself waiting back at the screen, but I realized I'm doing screen share, so you probably can't even see that. So that's too funny. Anyway, some people don't believe in this strategy, and that's totally cool, guys. That's not who this is for. This video, there's people out there who obviously have a different way of doing it. They've been super successful. The reason I want to share this with you guys today isn't to say like, oh, wow, look at what Corey's doing, this is so cool. Or like people go and get all nasty and negative right away and say, oh, well, negative this comment, negative that comment, whatever. And this isn't to say, oh, Corey's out there boasting about this property. Like, that's not it at all, guys. There are people out there who do way bigger deals than we do, and way more deals than we do. But I do know that there's a lot of people out there watching this who are like me. And I was really ambitious about wanting to get into real estate a couple of years ago. I really had a lot of goals. I really wanted to get started in this thing. And, I just didn't know really where to go or how to do it. And I was really interested in getting into rental properties. I wanted some cash flow so that I could eventually replace my income and just work for myself full time, and own rentals and do that kind of thing. And I started, looking for properties, and I had a real estate agent at the time who wasn't real investor friendly. I would say great person, but just like didn't quite understand some of the strategies and things like that I'm going to share with you guys today, and really wasn't that excited about showing, kind of properties that need some love, I guess you would say. Like, and I can't blame the agent. Like, if I was an agent, I wouldn't really want to do that either. And so, I was really frustrated because I felt like I had all this ambition and all this drive and everything else, but I just didn't know how to get going. I didn't understand. Like, I see people with, portfolios of 100 units or 200 units or whatever. And I went to go buy my first duplex. And I remember I looked at the closing statement. We actually had an accepted offer on it. And I looked at the closing statement, and before we closed on it, and I remember seeing like how much money I was going to have to bring. I was going to have to bring 25% to the closing table, which I think it was like an $80,000 property. So, it was a pretty good chunk of cash that I had to bring to the closing table, and that didn't include any repairs I was going to have to make. So, you know, at the time I didn't have like a lot of cash hanging around. It was going to be a lot of money to stick into this thing. And then I'm looking at that going, well, okay, I can do that for this property, but then how am I going to buy the next one? And then the next one and the next one? Because I didn't just want to buy one duplex. Like I wanted to buy a bunch of duplexes. And so then I started to learn about this strategy. And what's been great now is like the bank that we use right now, we're using Choice Bank out of Oshkosh for these properties. And Jerry, actually, I appreciate him. He's the one that turned me on to them. So they've been phenomenal to work with to this point. And one of the reasons why is a program like what I'm going to show you guys today, like how we did this, is we basically got paid at closing to do some of the updates and the repairs, okay? And so how this strategy essentially works, and again, if you guys are looking to get into real estate, you know, or you're in real estate, but you're putting 25% down or whatever, and you want to find a different way to do it. If you're not on our buyers list currently, again, just shoot me your email and your cell phone, and I'll add you to the buyers list. But anyway, getting back to this. So how this strategy works, guys, is it's not going to work typically with a property that you find listed on Zillow or through your real estate agent, unless it needs a lot of upgrading or a lot of work, okay? And it doesn't have to be a lot of work. I just mean it can't be like they already did all the work and now they're selling it like turnkey. That type of strategy does not work in this situation. And that's where like somebody like us, if you're looking for duplexes or single families, like we find a lot of these deals and then we sell our contracts to other investors who want to use a strategy like this. Okay, but you have to find a property that has some equity. And so if you're not familiar with equity, basically what it is it's the, you know, appraised value, if you will, once it's been fixed up versus what you're buying it for. So on here, I have our appraisal pulled up, and you'll see they have like prospective as is complete market value appraisal on here. And I'll see if I can go over to this. Hopefully this doesn't turn you guys off, but I don't know if you can see my hand moving around on here, but it'll have, here's what it's supposed to appraise out for once everything's been fixed up on it and rents have been increased, okay? This is what we purchased the property for, okay? So there's the difference between this and this is called your equity, okay? And so you gotta have some good equity in these properties in order for this strategy to work. And so what this banker will do is they will take this 717 and they will give us up to 80% of that 717. So that came out to like, I don't know, 580 something, whatever that number is. It came out to that. And so we bought it for this, and then we actually got a check after, you know, we got prorated rents and we got some other things for about $40,000 yesterday to stick into the property. So we got our roofers over there already working on it. We got a unit we're turning and doing some other things. But that's the key, is you have to be able to get a property that's either underperforming as far as, you know, the rents would go, and that's something that you can improve the rents on. If it's more in a multifamily space, if it's more in like a duplex, single family, whatever, you know, you just have to buy it below what comparable properties are selling it for. And, you know, typically you want to buy that low enough that you can add some value to it and still have at least the 20%, the difference between the 80 and 100% of the market value in there. So hopefully that's making sense so far. If it is, you know, just give me a thumbs up or a like over there. Stephen, the person who we work with, his name's Chad Miller, and there's actually two Chad Millers there, so it's kind of funny. One of them, we just call him Commercial Chad. So that's the guy that we work with. Okay, so that's the starting point, guys. Step one, you got to find a property and you got to get it low enough that you can add some value to it and that you can have some equity after you do so. Okay, so that's step one. All right, now let's see if I can go over here and we'll see if this closing statement comes out. I'm going to check back on my face. Oh yeah, cool. All right, this is sharing. Awesome. All right, so here's the closing statement from yesterday. All right, so we're going to go through this real briefly. So on this side, it's going to show here's what we are getting charged basically, and then here's what's getting funded on our behalf, or what has already been funded. So up here, you'll see this is what we purchased it for. We gave them a $5,000 earnest money deposit, so we get that back at closing. And then this is the loan amount, so 573. So that's that 80% of that 717 number, okay? Making sense? If so, give me a thumbs up. Here's our county taxes. So this is the proration through the year that we got a credit for the because we just start paying property taxes from yesterday through the rest of the year. And then here's the current rent that they were getting. They were getting 7,375 per month in total rents. We get that prorated because we close on the third day of the month. And a little strategy we like to do, we like to close a few days after the first of the month if we can, and that way we don't have to collect the rent for this month. We just get a credit from the title company for this amount. So we actually got that as income for June. And then here's all the different little fees that you get charged. Here's our appraisal fee. Here's a bunch of filing fees. You know, some bank. You'll see the bank fees and stuff on here. And then there's something called a lender's policy. Basically, it protects in case they didn't find some kind of liens or something else. It's like an insurance policy. And then they charge a little closing fee to do all the docs and everything else. And you'll see some recording fees to the county on this statement. And then over here, this is actually showing the total amount that we got. So $588,918 and 12 cents. And so I don't exactly remember how it all shook out, but basically we got a check for 40,000. Oh, right here, 40,802. All right. Then we got yesterday. It says undispersed because we were going to be able to do a draw, but we decided to take it up front because we're sticking a lot of money into it right away. So again, I wanted to show you guys this because it is real. Like, I think when I started, I didn't really believe that it was real. I kind of looked at it and I thought, wow, there's no way you can actually do this, right? But I wanted to show you guys this because I see a lot of people post stuff online too, and there's a lot of fluff out there and everything else. And I know I'm not posting this again for any other reason than just to say this is real. If you're, you know, if you're somebody who wants to get into real estate, but you're sitting there saying, I don't have a lot of cash, I don't have, you know, I'm not a trust fund baby, whatever. Well, here's a prime example of somebody just like that who's doing it. And again, not the best in the world. I'm not doing this to brag or any other reason than just to say, as an example, that this is real. You can get properties with none of your own cash into them. And you can do this in single families. You can do this in duplexes. You can do this wherever. You can do it in a multifamily space, obviously. Commercial properties, you know, it really doesn't matter, whatever you like. The old way of doing this strategy, guys, before I found Choice Bank, or I should say before Jerry gave me Choice Bank, is I would do the same strategy, except there was one other step. I would use like a private lender. So this might be somebody family friend who's got a bunch of equity in their house. They pull a line of credit on it. They're getting charged, you know, 5% from the bank. You maybe give them 10% interest, so they're going to make 5% on equity that was just in their house, right? That's one strategy. Somebody else might have an IRA, like a self-directed IRA, and they want to lend some money from that. Whatever the case is, you would borrow it from a personal friend or family member or something like that, and use that as your purchase. And then typically your interest rates and things are higher. And then what you would do is you would do the rehab, you would do the work, you would get it rented, the rent's higher, and then you would refinance the property at a later date once everything was up. Now you can still do that, it still works great. But what I like about using, you know, our bank is you get to basically bypass that entire step. So anyway, hopefully this